Ladies and gentlemen, thank you so much. Thank you so much for all the support that my channel has been getting lately. I know it's a small little channel so far, but we will grow together with your help and your support. I just hit 1,000, not subscribers. I know I was about to say subscribers, but I had 1,000 views on my first video. That's exciting for me. Okay, that's exciting for me because the videos that I put out, I take serious what I do. Right, my technical analysis is not a joke. I don't take for granted anything that I do. I'm not here to showcase a lie or showcase something that it's not. Interpretations are always up for debate. Okay, opinions and whatever, and so it's fine. At the end of the day, it's what I see in the markets, it's what I feel is interpreted, and it's what I feel that my experience has that has given me some sort of edge for me that I would like to share with you guys. Okay. And so thank you for appreciating that. Thank you for seeing that. I know the channel is growing. I'm almost at 700 subscribers. The next top is 1,000. I really want to get there. So thank you again. If you enjoy the content that I'm putting out, please give me a thumbs up, subscribe to the channel, and click on that bell notification so you'll be notified when I upload these videos. All right, guys. So yesterday we were discussing that the S&P and like the Qs and every other indice, we were trying to see if the 50-day simple moving average was going to hold support. Now it is holding it so far, all right, as expected. Okay, we were anticipating a bounce. I mean, we did not have a true test of it because we did not come right there to the line, but we are hovering right above it and we're not too far away from it. And so what that tells me is that we are still trying to push on higher. Okay, now what is the confirmation to the upside now? Okay, is this a dead cat bounce? Is this a bounce that is going to trap the bulls and now we're going head on lower? Now, it's yet to be determined. There's one key level that I want to show you guys today, and I'm going to show it to you in just a second. Okay, and that one key level is what could potentially signal the reversal. Okay, but before we dive into that, we got to take a look at the traditional indicators here as well, right? We got to look at the volume, the MACD, and the RSI. Aside from the 50-day simple moving average moving on higher and creating some support levels for the S&P, we also see that the volume for today was above average, but slightly below yesterday's volume. Okay, as you can see here, the red or the bear volume has been declining, and now we're looking to get a push on higher and potentially in a bullish volume, right? And we're starting to see that the MACD moving averages are trying to crawl and cross over, as well as the histogram trying to take to the positive side. I also noted that the RSI is not making a low here. Okay, so we are turning around and we potentially are trying to head on higher here as well. All right, now what I wanted to show you guys was what I presented yesterday, in case you missed yesterday's video on the SPX. So we are approaching OPEX, which is this Friday. Okay, and what does that mean? Why am I bringing this up? It's because if you see here, the lines that I have outlined, the lines that I've put here in the blue circles, okay, I will encourage you guys to go take a look and just Google OPEX calendar, and you'll see that June 18th, July 16th, August 19th, and September 17th, that's coming up at the end of this week, or OPEX expiry dates. Excuse me. And so we see that every time OPEX arrived, right, if I guess that's the term, we saw a dip in the markets, right? The few days leading up to OPEX was a dip. A few days leading up to OPEX was a dip here, and then we saw the rally, a dip, and then we saw the rally, and now we dipped, and now we're approaching OPEX, and now what's going to happen? Okay, that's yet to be determined, but we are seeing positive momentum out of the markets. All right, guys, so just keep in mind that OPEX is this Friday, and we still have tomorrow, Thursday, and Friday left. So, not yet out of the woods, but we shall see. All right, taking you back to the S&P or the SPY. Let's take a look at that level that I was just referring to. Actually, before we do that, right, these are the levels that I was outlining to you, the support levels here that I explained to you in the previous videos, and so on. So, yes, let's go down to the 30-minute time frame, and we will dissect what I was referring to or what that level is. So, I have here from August the 19th flow, we had 5 waves up. All right, we have the A wave, B wave, and the C wave decline. Let me turn this off for you. So what we're looking for here, guys, is that we bounced off from the key support zones using our Fibonacci retracement tools, and that's a 50% in the 618. So these two zones, or these two levels, are a retracement of the overall advance of the wave one. Okay, we saw that the decline held support. Sorry, not held support, but filled the gap, and then held support at the previous lines that I was explaining to you guys, right? That were the moving averages were leading up to. And then we see the bulls come and take control just out of this bounce. Now, the key level that I wanted to share with you guys is this. So normally we want to see out of a completed C wave or a wave 4, wave 2 decline, we want to see price action break above the A wave, and then to completely fully confirm this, we want to see a break above the B wave. Okay, so far we are shy of the B wave, of the A wave, but you saw that we did not quite there touched it, but we were almost there, but we rejected it. And what do I say that? Because what I want to see here, and I want to prove to you guys that if we start to count 5 waves out from the lows and 3 wave pullback, that is my signal. Okay, that is my signal. If we see 1, 2, 3, 4, and 5, and then we see a 1, 2, and 3. Okay, this structure is what I would like to see coming into coming into tomorrow, Friday, and potentially next week. Obviously breaking above this high here, because that will confirm a change in trend. That will confirm on the sort of the next impulsive wave structure, because we made a first impulsive, the retracement, and then we go. All right, guys. So it's very simple, very, very simple. Tomorrow we gotta keep an eyes open, or even pre-market. After hours and pre-market. We got to look out for 448.87 as our key level. If we fail to break that, guys, if we fail to break that, I'm going to repeat this. If we fail to break that, then it's almost set that this is becoming likely a 5-wave decline. And what do I say that? Because we start to see that, right? Let's say let me just delete this, right? For argument's sake, let's hide this. This would be 1, 2, 3, 4, and 5. You see that? 1, 2, 3, 4, and 5. If we don't go above this. And why do I say that? Besides it being the wave A, is because it's also potentially the wave 1, 2, 3, 4, and 5. Right? And obviously, as you know, per Elliott wave guidelines, wave 4 cannot go beyond the territory of wave 1. So that's why I'm saying if this is the wave 1 or wave A, then we need to go above it. We need to cross it in order to discount that bearish interpretation. All right, guys. So that's very clear, for plain and simple. That's all the bulls got to do, guys. That's all we got to do. Just push through this this level, and we out, and we may potentially see higher price action. All right. So out of the SPY over to the Qs. The Qs are also bouncing off our key fib zones that I've explaining to you guys. I mean, come on, this does not get any better than that, right? The 38.2% retracement has held support. Clearly, these two zones are a retracement of the overall wave 1 advance. So A, B, and C held support 38.2. Now our next level to look out for is again the previous high. Let me just put this here. The previous low rather. Okay, at 379.24. Let me add this here real quick for you guys. Text. This would be wave count confirmation for a possible trade opportunity to the upside. So we got to break above 379.24. Okay, to discount, to start counting for our the beginning of the next leg up. All right, guys. So that, and then obviously the previous wave, the previous high at 382.77. Over to the SMH. The SMH is looking ever so slightly positive. We can always argue that this is the completed wave 2 was here, okay, and that this is the start of 1, 2, and the makings of the third wave. However, until we break above the 1272, then we cannot discount the possibility that this is still the decline of 1, 2, 3, 4, and 5 to form support at the 268.77 and 264.91 region. Okay, IWM also showing some strength coming out of the 618 and the 50% retracement. So from the August 19th low, we went up in 1, down in 2, 3, 4, and 5 to form wave 1, ABC pullback correction, found support between the 50% retracement and the 618. All right, guys. So it's looking good so far. It's looking pretty. I'm optimistic, as I mentioned yesterday. I'm positive about this. I feel that we may break to new highs coming really soon. And so by, hopefully by the start of October, November, and December is where we can see the next leg up before I potentially now will start establishing the possibilities of the trend reversal coming into the next year. Okay, guys, so that's it for me tonight. I hope you all had a fantastic session. Subscribe to the channel. Thank you so much again. Help me reach the 700 subscribers. Like that the video. Give me a thumbs up. Subscribe. Click that bell notification. And also, if you want to join Trending Waves, the link to the Discord group is pinned in the comment section. Totally free to join. Come on in, and we'll give you details as to what to do next. All right, guys. As always, thank you so much, and have a good night. Bye-bye.